Hey everyone, welcome back to Corporate Decoder, the place where we dig into the real stories behind the endless stream of corporate filings. Today, we're unwrapping a fascinating move from iRhythm Technologies, Incorporated. It seems like they've been busy with a clever corporate maneuver. So let's find out what that means for you and me. Before we dive in, if you like getting these no-nonsense breakdowns of what companies are really up to, make sure you are subscribed and hit that notification bell. Also, we've got a fantastic community over on Discord where we break down these filings even further. You can find the link in the description below. So, what happened here? iRhythm Technologies has essentially reorganized itself by creating a new parent company. Think of it like swapping out the chassis of a car while keeping all the same great parts and engine underneath. This is a pretty common move for companies that want to set up a structure for future growth, or perhaps for tax reasons. The goal is to make things clearer and possibly more efficient, especially as the company gets bigger. This all officially went down on the 12th of January 2026. It was a reorganization aimed at creating a holding company structure. So the company we knew, iRhythm Technologies Incorporated, is now going to be a subsidiary of a new parent company, iRhythm Holdings Incorporated. It is like iRhythm Technologies Incorporated just went from being a regular company to a division under a bigger umbrella company, which is now called iRhythm Holdings Incorporated. The new parent company, iRhythm Holdings Incorporated, was actually created from another entity called LTCM Holdings Incorporated, and a third company, a little sub named LTCM Merger Sub Incorporated, was the vehicle used to merge iRhythm Technologies Incorporated into the new structure. The key takeaway is that iRhythm Technologies Incorporated itself continues to exist, but now it answers to this new parent. This is often called a corporate inversion or a holding company transaction. This means iRhythm Holdings Incorporated is now the main company you'll be looking at for reporting purposes. It is taking over the reporting responsibilities. It is their way of saying, hey, we're the new boss and all the legal stuff now flows through us. iRhythm Technologies Incorporated will eventually stop filing its own reports with the CC, so if you are following iRhythm Technologies Incorporated, all your attention should now be on iRhythm Holdings Incorporated. Now, the really interesting part for shareholders is what happens to their stock. If you own shares of iRhythm Technologies Incorporated common stock, you now own the exact same amount of shares in iRhythm Holdings Incorporated. It is like trading your old shares for new ones that represent the same ownership slice. The ticker symbol, IRTC, that you were used to watching on the Nasdaq Global Select Market, that is staying the same. So for the day-to-day trader, it might feel like business as usual, but behind the scenes, the corporate structure has shifted. This reorganization is designed to be tax-free for shareholders, meaning you shouldn't have to pay immediate taxes on the stock conversion. That is always a good thing. Also, the conversion of their 1.50% convertible senior notes into shares of the new parent company's stock is being handled smoothly. This means that for bondholders, their notes are now convertible into shares of iRhythm Holdings Incorporated, with the terms adjusted accordingly. What about the people running the show? Well, it seems like the leadership team is staying put. The directors and executive officers of iRhythm Holdings Incorporated are the same folks who were in charge of iRhythm Technologies Incorporated before the switch. For example, Quentin Blackford is still the president and chief executive officer, and Daniel Wilson remains the chief financial officer. This stability suggests they want to keep the operational momentum going without disruption. They've even listed out all the directors and their committee roles, which is pretty standard for these filings. It shows who is on the audit committee, compensation committee, and nominating and governance committee. They've also provided some background on key individuals. For instance, Karen McGuinness, who has a strong background in finance and accounting from her time at companies like Illumina Incorporated, is on the board. So is Kevin O'Boyle, who boasts over 20 years of executive leadership and financial experience, particularly at Nuvasiv, where he was instrumental in significant growth. On the executive side, Sean Freeman leads strategy and corporate development, having previously worked at companies like Ceramtech Group AG and Nuvasiv Incorporated. Brian Lawrence is the chief technology officer with a deep technical background from his time at Vapotherm Incorporated and Hillrom Holdings Incorporated. This continuity in leadership and expertise is a positive sign. Looking at the financial side, while this filing isn't focused on detailed financial statements like a quarterly report, it does touch on how this holding company structure affects things. The key point here is that immediately after the restructuring, the consolidated assets, businesses, and operations of iRhythm Holdings Incorporated are essentially the same as they were for iRhythm Technologies. Incorporated, this wasn't a strategic shift in business direction, but rather a change in how the company is legally organized. Interestingly, alongside this corporate news, iRhythm also put out a press release on the 12th of January 2026. This release talked about preliminary fourth quarter highlights for 2025 and gave a financial outlook for both 2025 and 2026. This indicates that even with the corporate restructuring, they are still focused on providing forward. Looking financial guidance, this is important because it shows investors what the company expects in terms of revenue and profitability moving forward. Now, let's talk about the bigger picture. This kind of holding company transaction, while it can sound complicated, is often about creating flexibility for the future. It can make it easier to spin off divisions, acquire other companies, or even prepare for a sale or merger down the line. For iRhythm specifically, it likely aims to create a cleaner structure for its expanding operations. However, there are always risks. Any significant corporate change, even a seemingly simple restructuring, can introduce unforeseen complexities. The success of this move will depend on how smoothly the new structure operates and whether it truly simplifies things or introduces new bureaucratic hurdles. The fact that the leadership team remains the same is a strong point, as it minimizes the risk of disruption to operations and strategy. In conclusion, iRhythm Technologies Incorporated has executed a holding company transaction, forming iRhythm Holdings Incorporated as its new parent entity. This is primarily a structural change, with the business operations and leadership remaining consistent. The stock ticker IRTC continues, and the company is aiming for a tax-free transition for its shareholders. While this move is generally seen as a step towards greater organizational clarity and potential future flexibility, the true impact will be seen in how this new structure supports iRhythm's growth and operational efficiency. So that is our breakdown of this corporate maneuver. What are your thoughts on this type of restructuring? Do you think it benefits shareholders in the long run? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into the world of corporate finance. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.